Bleeding Edge subscribers, Colin here. And look, 4 weeks ago, I came to you and I said this was going to be the most critical month of 2024. And it all culminated this week with some of the largest companies, including Meta and Microsoft and Google. They announced their company earnings. And after going through each company's financial statements and listening to the executives discuss the business climate and the outlook, two things became clear that I want to share with you today. Over the next several years, there's going to be investments that you have to be invested in. And then there's investments that you need to be invested in. So let's start with the obvious. You have to be exposed to mega cap technology stocks. That might be the understatement of the day. You either have bought stocks like Google, Microsoft, Amazon, Nvidia individually in your broker account, or you have exposure to them through index funds. Many of you have already done this. And no matter what happens with the Federal Reserve's fight on inflation and interest rates, these companies have the ability to weather the storm better than most. And an inflationary environment, that dollar that isn't invested is losing purchasing power even faster than before. So, in many ways, investing is even more important today than ever. But you know this already. You have to be invested, and you have to be invested in mega cap technology stocks. Now, but I want to talk about what you need to be invested in. And this might be slightly less obvious, but was confirmed when we heard from the large technology companies this week. If you recall, I've been a big advocate of the hardware, software, everywhere progression that technology often takes. So if we rewind time back a little bit to the 1990s when the internet was being popularized and this progression of hardware, software everywhere played out. It first started with the hardware infrastructure of modems, fiber optic cables, and servers, really the backbone of the internet. Soon, once enough homes had personal computers and internet connections, the software phase of websites and other services began to really grow. And while the internet rapidly penetrated homes through personal computers, it really wasn't until 2007 when the Apple iPhone was released when the internet kind of went everywhere we went. The exciting part is a new hardware, software, everywhere phase is playing out once again. And look, if you didn't get rich and wealthy during the dot-com boom, you really have a second chance of it today. When Google, Microsoft, and Meta announced earnings this week, it came with a massive increase in spending on the data center. In fact, when Meta announced its increased spending on AI projects, the stock actually fell because it was enough to impact profits for the remainder of the year. But what do we already know about this spending? And we're not talking about millions of dollars or even a few billion dollars. Combined, just these three companies, Meta, Google, Microsoft, they're going to spend over $100 billion on the data center combined just over the next 12 months. And each company seemed committed to spending even more as we head into 2025. When you start to include Apple, Amazon, Oracle, IBM, and dozens of other companies that will be spending billions of dollars on AI hardware, the amount of money being spent starts to approach the $1 trillion mark. And as investors, we need to take advantage of that spending. And good news is there's an easy way and maybe a slightly more challenging way to get this done. First, the easy way. Broadly diversified semiconductor ETFs that hold a basket of stocks within the sector will continue to expand revenue and profits during this investment phase by the large technology stocks. And so, look, I know when you pull up the charts of the two most popular semiconductor ETFs, the SMH and the SOX, the SOXX, you'll think you've missed a massive opportunity because they're already up big. But the truth is, the investment cycle is going to expand from a few $100 billion to nearly $1 trillion just over the next several years. That's enough to keep these ETFs at the top of the performance category, especially when we start to compare these to non-tech sectors. So at the very least, you should have some additional exposure to this sector in the coming years. Now, the more exciting, but maybe slightly more challenging way to play this mega spending trend, there are many, many smaller, lesser known semiconductor stocks that have been riding the investment wave higher, but are nowhere near done going up. That's because as we look at the hardware build out, the amount of testing equipment, cooling technology, advanced packaging, and cabling that's going to be required is being underestimated right now. The massive spending tsunami on the data center really only began about 6 months ago. We still have hundreds of billions of dollars that are going to be spent just over the next 6 to 12 months. And if you look out a few years, easily $1 trillion could be spent. NVIDIA, AMD, Broadcom, Taiwan Semiconductor, ASML, they have thousands of suppliers. And inside the data center are millions of cables and switches and connections that will need to be made. The billions being spent by the mega cap technology companies, it's staggering. In fact, we've never seen anything like this before. And believe it or not, it's just beginning. So as you research and look at stocks in the semiconductor space that are already up 50, 60, or even 100% over the past year, realize, first of all, it's for good reason. Billions of dollars will flow from the coffers of the mega cap tech companies into the semiconductor industry. Now, out of respect for the customers and the subscribers that pay for our research services, I can't reveal specific names, especially on the smaller side. But despite the fact that we've recommended several stocks just over the past couple of months that has seen huge gain for our subscribers, I still believe it's not too late to benefit from this investment wave. Guys, that was the bleeding edge for today. I'll see you again next week.